3 big steps on how to fundraise $1 million for your startup. First off, what you have to do is build an MVP. An MVP stands for minimum viable product. So what's the most basic version of that product that you can build really quickly just to prove that, there's an audience for, what you're trying to build, what you're trying to sell. At DeFi Dive, this means building a really simple information, news and asset management terminal that can really help people filter the noise and save time. This is a thesis which we're rocking with to essentially build a product off the back of. Secondly, you have to market your products. Once you've got your MVP done, you have to gauge your user feedback, and you'll generally know at this stage if you need to work on pivoting or changing your product slightly to fit users better, or if they like your products, you've essentially got your product market fit. You can focus on user growth and pay attention to what everybody says about your product. It's this early user feedback which will really help you refine a product into something which will grow and become a lot more popular in the future. Once you have that traction, third step, most important, is sort out all your admin. Sorting out all your admin basically means get all your legal paperwork done, from the incorporation to the partnership agreements, and then, very important, your pitch deck. A pitch deck is 10 slides to introduce to investors what your company does, what you're hoping to do, and concisely show how you're going to generate revenue within your business. So show your path to greater profitability, essentially. Once you've got that, you can then approach investors and start your fundraise. Fundraise is broken down into a couple of steps, but in a nutshell, it's arranging investor pitches. Secondly, it's making sure you have the term sheet, again, legals, ready to show to investors, saying, look, these are the terms of the investment. And thirdly, negotiating and agreeing the terms. Again, this is broken up into a subset of finding the lead investor, the investor with the most clout, biggest name, or essentially the most amount of money that they're going to give you. And they will do what's called setting the terms. Setting the terms is absolutely agreeing to what the business's value is going to be and how much you're going to raise for what amount of share in a company. And that's your 3 main steps to raising funding in your startup.